Flip Anything USA. Doing a little poolside chat. I thought we'd talk about leveraging. I actually was just having some dinner and sat at the bar with my son and met an old guy, 84 years old, been a stockbroker, and he was kind of talking about how Merrill Lynch kind of lost a lot of money. Lost a lot of money for him too. But he was actually a stockbroker. And basically, I said, well, what did? He goes, leveraging. He goes, leveraging. They over-leveraged. And I go, really? And I go, so what does that mean exactly in stockbroker terms? I'm a real estate guy, right? And he says, and it's the same thing. They borrow money to make money, and when things go south, they're in trouble. So I thought it was interesting, and I thought we could talk about that a little bit. I've been a few times in the last 43 years that I've been investing have I over-leveraged and got myself in trouble. And hey guys, give me an audio check here real quick. Make sure, let me know that you guys hear me fine, please. But as far as stockbrokers go and investors go, Warren Buffett, of course, is one of my favorites. And it's because he's got a common sense approach. I like that, he's someone that'll say he'll deal with, 1,000 pitches, or 10,000 pitches and say no over and over and over again. Anyways, it's quiet tonight. Somebody please go in the chat and let me know that you hear me. Anyways, so I thought we would check it out. So those of you that just got here, my name's Tom. I've been a real estate investor since I was 19. That's like 43 years now, and been very successful at it. I got a very, very successful mentorship program. If you're interested in learning about real estate, I urge you to compare me to anybody out there in YouTube land that you're looking at or considering. I know I'm better than everybody that's out there, quite honestly. Okay, great, loud and clear. Thanks, Bungalow and Eric. But so my students, of course, look, everybody. You got to, when you're young, you kind of role model. You find people that have what you want, and then you kind of follow their lead. And if you're smart, you ask a lot of questions, and I did that a lot with some of my mentors. My mentors were basically not real estate mentors, not in the sense that what I do for everybody, it's like on steroids. In other words, there is no fluff in me. I'm a businessman. I spit everything out, get it to the point. And like I say, I have a student today. Hopefully we're gonna get that deal, what he wants today. And that's the thing. Time kills deals. I tell everybody you can't let too much time go by. You got to get things signed. Super important. You got to get things signed right away. And that procrastination, a lot of people, if you're not ready, this is the problem. You end up procrastinating because you're not ready. You're not ready. You don't know what to do. And see, it's so much more power if you know what to do, or if you're surrounded by a group of people that are successful and have a mentor that's been there, done it so many times that he can be very relatively certain that you need to do this or you need to do that. And you can see, if you go to flipanythingusa.com, you'll see, and I won't bore you guys to death because I know a lot of you guys get tired of me going point down my students and the money they make. But if you go to flipanythingusa.com, you'll see plenty of videos and testimonials of people that you can identify with, moms and dads and grandpas and young people just starting out that have made millions of dollars. And these are some of them behind me right here. And you just go to flipanythingusa.com, and that's where you'll find it. So, hey, if you just got here, be sure to get my book, Wake Up and Smell the Real Estate. Been a bestseller on Amazon, Audible, and Kindle. Also, hit that like button, hit that subscribe button. And so, but anybody wants to call in, you can call in at that number, and we can talk too. But let's start with a little Warren Buffett, and let's just listen to some shorts here first, okay?
You can use leverage, and it's the only way a smart guy can go broke. I mean, it basically is if you owe money, you can't pay tomorrow. If you just pay for everything and you do smart things, eventually you get very rich. You can do smart things and use leverage, and if you do one wrong thing along the way, it can wipe you out, because anything times zero is zero. But it's so reinforcing when the people around you are doing it successfully, you're doing it successfully, and it's a lot like Cinderella at the ball. I mean, you know at midnight everything's going to turn to pumpkins and mice, right? But as the evening goes along, I mean, you know, the guys look better all the time, the music sounds better, it's more and more fun. You think, why the hell should I leave at 11:45? You know, I'll leave at 2 minutes to 12. But the trouble is, there are no clocks on the wall. And everybody thinks they're going to leave at 2 minutes to 12.
And you're having a good time.
Yeah, sure.
Yeah.
You can use leverage, and it's the only way a smart guy.
If it's too good to be true, it usually is. Always look at how much the other guy is making when he's trying to sell you something, and stay away from leverage. Nobody ever goes broke that doesn't owe money. A long, long time ago, a friend of mine said to me about leverage, he said, you know, if you're smart, you don't need it, and if you're dumb, you've got no business using it. If it's too good to be true, it usually...
You know, that's a good point. What he just said, somebody told him a long time ago. He said, let's just listen to it. He's about to say it again. Listen.
...is. Always look at how much the other guy is making when he's trying to sell you something, and stay away from leverage. Nobody ever goes broke that doesn't owe money. A long, long time ago, a friend of mine said to me about leverage, he said, you know, if you're smart, you don't need it, and if you're dumb, you've got no business using it.
And that's it right there. If you're smart, you don't need it. And if you're dumb, you got no business using it. And that's the thing, is dumb people kind of get caught in that thing. And I've had people tell me, you know, in the past, oh, if I just had $100,000, if I just had $500,000, you know, borrowed from somebody else, they could make so much money. I said, well, what experience do you have, you know, investing $500,000 that makes you so confident that you're going to do a good job? And it's kind of like, they don't know. They don't know. I can tell you for myself, because I've leveraged from day one, right? I bought my first property when I was 19, 10% interest rate, but it penciled. In other words, it was kind of a simple thing. Yeah, I was leveraged 10 to 1, right? In other words, I owed $100,000 and I put $10,000 down, $110,000 building. But you know, you've got some hedges, right? You've got, well, I can rent it. I can rent the building for more than the payment, or a little bit more than the payment. Or in my case, I needed a place to rent. In my case, I actually lived in the building, and I operated my business at a cabinet shop. So there's different hedges. Like, so you can leverage, but you got to have hedges, right? And you know, some of those hedges, like if you buy a building, obviously you can rent it out. A lot of people get nervous if they have a very, very big building. Like, oh, who's going to rent this from me? And there's warehouses going up everywhere, and you know, and warehouse is pretty safe stuff. But I'm not going to get into why not here. But just to give you an idea, like, let me give you an example. I'm going to just talk about some of my own stuff here. So, like, here's an industrial building. This is a warehouse, right? This is a 20,000 square foot warehouse that I own. Now, when I bought that building, I had a use for it, right? I actually utilized it as a warehouse. So that was my hedge right off the bat, is, well, I need a warehouse anyways. I'm going to have to rent one. Instead, I bought it, right? So my mortgage is actually much less than I would pay rent. So there's my hedge. Now, next thing is, okay, I reduced that company down, and okay, I rent out half of it. Well, half of it is a warehouse. Again, there's my hedge. Warehouse, and by the way, is super popular. Warehouses are everywhere. You'll see unmarked warehouses, and you've got people that are running furniture stores from their desk at home. They don't have a showroom. Their showroom is the internet. Their showroom is the web. People go out and look at couches and tables and this and that, and they kind of examine it. You know, you can even like virtually put it in their room. And so, again, so they don't even need a showroom. Same things going on with ghost kitchens. People are creating restaurants out of thin air. They don't have a bricks and mortar place. They don't even have a trailer. But they've created a menu. They've created a presence on the web, and then they've created the logo and the napkins and the bags, and they'll take those over to like Outback. Outback, by the way, does this, and Outback is making food and steaks and stuff for people that have like a virtual steakhouse. They can order from that virtual steakhouse. It actually ends up getting made at Outback, for their custom, for whoever hired them to do it. and then Uber Eats is coming in and out, grabbing stuff and taking it away. But so in other words, where I was going with this is that when I buy a building like this, I'm leveraging into buying it. Of course, I only put about 25% down on average. As I've gotten more and more, established over these decades, than like a property like this, right? This is a multi-million-dollar property. I paid $1 million for this property. I bought it for $1,050,000 or $1,075,000, and when I bought it, I put like $1,025,000 down. So in other words, I bought a property, and it sounds like I borrowed $75,000 because I put $1 million down on a $1,075,000 building. But no, what I did is I made arrangements so that the day that the building closed, I had a line of credit for $800,000. So even though I put $1 million down on this building, and a bank, basically gave me the money for the balance, which was like, $75,000. But in addition to that, they gave me a line of credit for $800,000. So now I have a property that I have the ability to draw money on. I had a drawdown note. It wasn't technically a line of credit. It was just something I could draw money on if I needed it. So again, pretty safe, right? Pretty safe. In other words, I've got an asset that's almost 100% paid for and cash available to me that I don't have to pay interest on unless I pull it out of the bank. So that's being leveraged, but being very conservative, getting it set up. Now this is a building. And I still own this building. This is like a retail strip center. It's got a restaurant and a dry cleaner and I got a big bar in there. It's quite a really popular bar. A vape shop, a catering company, a hair and nails place, a really awesome barber shop. Actually, it's pretty cool. I got a video I need to get out on that. So like this one, again, I paid cash for this building, but again, if I need money, I can pull it out from it. Now, in the beginning though, so now I don't want to get too confused here. Anybody got any questions? Please jump in. And there's a phone call. There's a phone number if you want to call in. So, but these kind of assets, again, you get them paid for, and I know that sounds easy. It takes time for those things to happen. But this is why I'm, Flip Anything USA, and I teach my students this is what we do is we buy land and we buy houses because that's the most of what you see in all these pictures. And then you turn and flip those. And then when you have enough cash, then you buy something to hold, something to keep. Now, but let's talk about this. So, because this is actually where I was going with this. So here's a 21,000 square foot building. Let's go down on the ground here and take a look. And so if you're a younger or a not as not as wealthy of an investor, you would be more comfortable, more than likely, with a 20,000 square foot building like you see right here that has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 tenants, right? Because that does make people feel kind of warm and fuzzy when they go, okay, well, if one person moves out, I still have another 12 that are paying rent. Okay, so that you could leverage. In other words, you could buy this property, and let's just say you're squeezing into it. You put 20% down, the bank gave you 80%. It's a lot of money to owe. Now, you'd feel a lot more comfortable, covering yourself with, even though you're leveraged, whatever, would it be 8 to 1, about 4 to 1. But you would feel good that, okay, if one of these tenants moves out, I still have what I have covered, right? But when we go back to this other building that I showed you earlier, that I also own, right here, you may get a little more nervous if you have one tenant. Like I have one tenant. I have just pretty much one tenant in here. It pays me over $20,000 a month. Well, if he moved out, ouch, right? Ouch, $20,000 a month not coming in. Well, this is a small part of my portfolio. It stings a little bit, but I know I'm going to get it filled again. But if that was the only asset that I owned, I would be quite concerned. Or even maybe if I bought it and I put 20% down and I realized that, I need that rent. I need that rent to pay that mortgage, right? I need it. This would perhaps scare me away, even if it was equally as good a deal as this one over here. Let's just say that they're equally as good a deal in every way, but the difference is I've got a kind of a hedge on my bet here because I have multiple tenants in here, because I know they're not all going to go out of business at once, or the other one could happen. And of course, you get your confidence after a while. Listen, I can tell you right now, I don't ever worry about my warehouse properties filling up. They fill immediately. There's such a high demand for warehouse, and it all has to do with the fact that we order so much stuff online, right? In other words, there's just, this is why Amazon can deliver you something in less than 24 hours. They have warehouses everywhere, absolutely everywhere. And so, they got product pretty much everywhere. So, hey, Joshua, good to see you in here. We're just talking about leverage, how it can make or break you. And, I've been very fortunate. I've never filed bankruptcy. I've probably been a little bit over leveraged at times, and there's tough times. Like 2009 was a bit of a hit, but that wasn't nearly as bad as, going back actually to when I started in the 80s. It was much tougher, much higher interest rates too. So yeah, any old timers out there want to call? There's the phone number, 424-866-7929. Anybody lose their ass or have any advice for leveraging, what to do, what not to do? Hey man, call in. We'll talk about it. So I like this because these are the kind of questions, of course, that come up in the class. You're in. Everybody knows that's in my class. And by the way, I remind everybody, there's my book, Wake Up and Smell the Real Estate. It's been a bestseller on Amazon, Audible, and Kindle, and I would highly recommend you get it. I think it's the best real estate book made. I really do, and most people agree. You can look at the reviews on it. But anyways, but I'm going to talk about some. Let me do this. Okay, look, there's probably $100 million in real estate here. And I still have tens of millions. Of course, I've turned properties and I've made my profits. Again, this is one of the ways I've stayed safe is I flip and I flip and I flip and I flip and I take that cash, and then when I buy something, again, I apply those standards that I was just explaining to you. This is a building I bought not that long ago, and again, this is another one that is like a pretty safe. It's a safe property. If you get out on the ground here, you see, in fact, I had to call the plumber a little while ago. A little problem with one of these, but I got an animal clinic. I've got a palateria, basically a popsicle shop. I've got a massage parlor, got a couple of loan places, Cuban bakery, martial arts, and that's kind of standard stuff. And again, multiple tenants. It's not a warehouse anyways, but there's plenty of warehouses actually that lend themselves to be in multi-tenant use as well. But in fact, I'm looking at some stuff here. Maybe I'll share that with you too in a little while here. But I was going to take you back to the 80s here. Let me take you back to the 80s where I first started, right? Okay, this is we're going back is like to 1981 now, and what you'll see here is the stuff that I bought. I bought this the first building I ever bought. I put $10,000 down. I needed a place to live. I needed a place to rent. So in other words, I had a hedge, right? In other words, I wasn't living in a home with a wife and kids and buying this and hoping somebody would have rented it. I was the tenant, so pretty easy. No-brainer for me to move into this one. So that's one. Now, it gets a little scarier, and I was young and not nearly as, I didn't have this much money. I was I was 19 then, and, I was getting more and more concerned with money as things went on, especially being self-employed. But again, so like a building like this, I bought this building for $105,000. And I think I put $10,000 down on it, and I got him to carry it for a short while. Now, a lot of people are like, God, how can you're going to pay it off in 2 years? Why? I mean, that's scary, you know. Are you going to have the money in 2 years? Well, the answer is, if I'm buying the property significantly under market, I can sell it tomorrow anyways. I can watch the market, and if things start to go down, then I might go, okay, get it on the market, let's get rid of it. Because I have this delta between what it's worth and what I paid for it. So if I start to get concerned, things are going down, just dump it right away. Worst case, it's a wash, right? But if things are kind of progressively getting better, I'll say, oh, I'll just hang on to this a little while. You know, maybe I raise the rents and that sort of thing. Or maybe I sell the building to the actual person that actually occupies the thing. But again, if you flip, this is a lot of people come into the class and they get into the mindset that they want to just buy and hold. I know Thatch Wynn, I know he's a pretty popular guy out there, but he's still holding properties that he bought when he was broke, and I don't understand that. I don't think he gets rich as quick as he could, for holding on to it like he has. But, you know, other things, you know, like I remember, you know, this, you know, the other thing is the interest rate is what'll get you, right? So like right now, this is what's killing people so much right now, is people got 4% interest rates, variable, even if they got it fixed, but they got a 5-year call, right? That's the mistake, is having a 5-year call. So if you see that 5-year call coming and the interest rates are trending up, what's the prudent thing to do? Lock in a fixed rate. Pay a little bit more than you have to today compared to a variable, but lock it in, and now you got another 5 years now from that point to carry you through. Or if you can get a longer term, you can get a 10-year loan. Not all the banks are great, or not all the banks want to do that, but you can always get, and this is also goes to leveraging. When I get loans, what I usually do is I'll negotiate a cap rate on the loan. In other words, let's just say I've got a fixed rate at 5%, but when it renews in 5 years, if they got to have a renewal, I'll say, okay, but I want a 1% cap limit. You can't go up on me more than 1%. And so they'll agree to that. And so then when things up, and maybe things have gone from, 4.5 to 6.25, 6.5, well, I only have to pay another 1 point over that 4.5. So I'm still 5.5. I'm feeling good. Meanwhile, other people that had leveraged into their properties with a 4% loan, and now 5 years elapses, and now interest rates are 7.5%. And when they have to remake that loan, they're upside down. They can't. There's just no fixing it. That's what kills them. That's what kills real estate investors. More than anything is that right there. But anyways, I just wanted to share that with everybody. And listen, if you don't know about my book, there's my book, Wake Up and Smell the Real Estate. The other thing you should know about is my class. My class has got the most successful students, guarantee it. Compare them to anybody, and certainly if you're going to look around for mentoring, you definitely want to find somebody that's got the best, most successful students, and I would tell you right now that is me. And so I invite you to go to flipanythingusa.com. Also, get in the webinar. I got a webinar this Thursday, 7 p.m., and it might be the last one for December. So if you've been sitting on the fence or you've been wanting to get in, this is the time to get in. A lot of people. It's kind of great because I'm seeing a lot of people very enthused that have joined, have gotten into the mentorship. Guys that have maybe a couple $100,000 or even $50,000. They've saved. They're good savers, but they realize, that some of the realizations a lot of people get out there is they go, they realize, well, I've been sitting here in this house renting, or thinking about buying the house across the street. I watched the house across the street double in price, and I'm still sitting on the $50,000, $60,000, $70,000 I saved. Hey, Russ, good to see you. Russ, also fantastic student in the class, made, multimillionaire now. Always pleasure seeing you in here, Russ. So we're talking about leveraging and just, how it's the downfall of many, but also at the same time, I say it all the time in class, as you know, I make money on the borrowed money. You have to. I mean, if you want to get rich faster, you make money on the borrowed money. So, just the easiest way to look at it is if you put 25% down on something, and let's say the property's making 8%, you got a 4% loan, so you're making 8% on your 25%, and then on the 3/4 that's borrowed, you're making 1.5 times as much on that borrowed money as you are on the money that you put down that's all yours. So really simple math overall, but a lot of people lack the common sense to see some of these things. So anyways, that's it. I just had a little time. I thought I'd throw it out there and share, but mostly I really want to get people into this webinar. Thursday, 7 p.m. It's been very successful. I'm seeing a lot bigger numbers, and I like the comparisons. I like people that are coming over from Pace Morby and Chris Crone and Grant Cardone, and then signing with me. They realize, oh yeah, you're the real deal. That's what I hear. They say, Tom, you're the real deal. I didn't get that impression from these other guys, and I understand. Okay, and I do understand. So anyways, if nobody's going to call in, I think I'm just going to call it quits. But always a pleasure, everybody, and I hope everybody has just a fantastic 2025. There's no reason you shouldn't. You just got to be careful. You got to build your knowledge base. If you got more money than sense, then you're probably somebody that you should get some mentoring. Who knows? I may start a fund here at some point. And if I do, it'll be the most profitable fund amongst the others that are out there. That I promise you. Only because I have such a high standard for making money. And anyways, Russ, what do you got going? You got the kids in bed yet, or it's a little early for you over there in Washington or Portland, I should say. Anyways, I hadn't heard from Garrett in a long time. I'm wondering where Garrett is. Garrett used to be, he would always come to the Poolside chats, and so that's what attracted him to the program from the very beginning. But anyways, so I'll call it quits, guys. Hey, thanks for popping in, and if I don't sleep well tonight, I may just come back on in a couple hours. But I got a few things I need to tend to. It's wonderful. I just wrote, I don't know, $700,000-800,000 in tax checks, right? Property tax checks. And this is kind of life of an investor, right? You get down in the last 6 months of the year, you got to start really considering putting away that money to pay all those property taxes. And then come January, you need to concentrate on putting some money away for those, for your income tax. So, Russ wrote, working on an inspection repair list for the boxing house. The boxing house. Oh, you know what? I do have something I could kind of share with you guys. I'll save it. List. Oh, the boring house. Sorry, that's like I said, boxing. Yeah. Russ just sold the home. I think you're making $1 million on that one, right? Roughly $1 million. And that's going to be neat to see what you do with that, the $1 million equity or more that you have in that house, or $1.5 million. You guys, if watching, if you're if you're a businessman, you understand business, you understand, you have to work, use your head to make a living. You might be a good candidate. Urge you to go to flipanythingusa.com, go to the webinar, or just go straight to the mentorship. Take this down. Right here where you see webinar, you just click on that, or actually even better, apply for mentorship. It'll tell me a little bit about you. I'll throw you a text. We can have a call. Any questions you got, I'll answer them to the best, and I won't charge you a penny for it. And I do phone consultations all the time. If anybody wants to, that's also available to you. Just you'll find it within the website. But inspection repair list. So Russ is knocking out so I guess, sometimes these repairmen, they're kind of a hitman. They come in and they just pick the shit out of everything. And some of it fair, some of it not fair. But, you know, it's just, sometimes it's silly. A guy goes in there and he says, well, that's not up to code. Well, it was up to code in 1999 when it was built. Of course, it's not up to code today, and it doesn't have to be. So it's always funny. You know, I call them hitmen because that's what their job is to beat the property up and make the seller feel like they got, deficiencies that need to be rectified and fixed, and most times they don't. But it wears on them, and you know what? I've been guilty of using the hit job report guys too. Anyways, are most of the complaints from us or the things pointed out, in your opinion, are they fair? What they're pointing out? And I'm watching.
You know, an index fund would do 11%. Well, imagine how you'd have done if you'd leveraged that up 50%, whatever the prevailing rates were over time. So a leveraged investment in a business is going to beat an unleveraged investment in a good business. It's not something that interests us at all. We are not going to leverage up Berkshire. If we'd leveraged up Berkshire, we'd have made a whole lot more money, obviously, over the years. But both Charlie and I probably have seen some more high IQ people, really extraordinarily IQ people, destroyed by leverage. You know.
Yeah, so that's interesting. Like I say, that leverage will make you or break you. And if you're smart with it, you can just, I mean, I've made a lot of money. I've leveraged everything, right? Pretty much I've leveraged everything. But the thing that I do that most people don't do is I flip. In other words, I turn the asset. I realize my gain immediately, and I try to defer that gain so I don't have to pay tax on it now, I'll pay it down the road. And I know, I mean, it's common sense. You can just work it out on paper. It's the best thing to do. It's the best way to go. Now, not to say that you can't, you can't buy very much. And let's just say you started, somebody gave you $50,000 and you immediately go out and you make a great deal. You know, you buy a property that's worth $150 and you get it for $50,000. And you're going, great, I'm getting a 30% return. I'm making $15,000 a year on my $50,000. It sounds good. It sounds good. But what you should do, rather than just sit here and collect $15,000 a year on your 50, you got to use your head. The reason you're making $15,000 on your 50 is because you made $50,000 on your 50, or maybe you made $100,000 on your 50. So where you're losing it is that you're not seeing where the money is. You're thinking, oh, I got this great deal, I'm making 30%. No, you got this great deal and you made $100,000, and now you're not making 100. Maybe you're making only whatever, 10%, right? Maybe you're only making 10% on the value of the asset, but it's because you bought it so far under market. So that's what you need to do. You need to kind of rinse and repeat that, right? Sell it, realize you're 100 or 150, and then do it again. And now get something that's worth $450 for $150,000. I know it sounds easy, right? Reminds me of Steve Martin. He had a thing, he'd say, how to make $1 million. And he would say, first, you get $1 million, okay, which is kind of the joke in itself. But you have to find a deal that's worth more than you're paying for it. It's totally doable. Russ just wrote, some are fair like windows. Okay, we're talking about the report. I asked him if the report was a hit job or not. And he said, no, some are fair like windows with broken seals. Others are pushing it like slightly slower than normal drain. Yeah, I mean, that, listen, if you ever go to a lawyer, I mean, and I'm not knocking any lawyers particularly out there. I've got friends that are lawyers, and but in general, you go to a lawyer, they don't really necessarily want to go, oh, just do this, and if they're your buddy, they will, I just do this and just settle, just settle it up, make it easy, just settle. Where the other ones will say, oh, they got no right to do that. You should be getting much more. That's not fair. And they gaslight, right? Because that's where the money is, in gaslighting. And I'm not saying this about any particular lawyer. If you're a lawyer out there, you know what I'm talking about. You're either one or you're not. It doesn't matter to me. But but that's how that works. Yeah, well, that's good, Russ. Like I say, I've had reports, I go through it, and I'm going, no, and I go, oh, wow, I didn't know that. And then I go fix that particular item. So hey, anyways, again, thanks for watching, everybody. Please hit that subscribe button, and be sure to get in the webinar this Thursday, 7 p.m., but you got to go down there and you fill out that link, and then you'll get the invite sent to you. And super simple, and you'll be on the list. Even if you can't make this Thursday, you'll make it on another Thursday, and you'll be glad you did. Number one comment I get is, I wish I found you earlier, Tom. I wish I found you earlier. Hear it all the time. So again, Russ, thanks for coming in. Joshua, Eric, and we're going to have a fantastic 2025. I know we are. And you can just see the country's under new management, and it's just night and day. It's so night and day from the mess that we've had for the last 4 years. So anyways, thanks for watching, everybody, and talk to you soon.
And listen, time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything. USA, go.
You want to learn how to make millions of dollars in real estate? I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, flipanythingusa.com/webinar. Sign up for it. You can talk to me face to face if you want. Don't waste any time. Hit that subscribe button, hit that like button. You don't want to miss my channel. I've been doing it for years.